Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of what happens if your tax preparer committed fraud with your return and whether you're liable. So there is a major misconception out there with a lot of people, especially people who come to the U.S. and are not used to the U.S. tax system, which is, hey, I paid this guy or gal to do my tax return. If they do something wrong, then they should be subject to issue with the IRS, not me. Unfortunately, the IRS doesn't see it that way. From an IRS perspective, you, taxpayer, are signing it under penalty of perjury. By signing it under penalty of perjury, you're saying, hey, IRS, I've reviewed it, I understand it, and I approve it. Now, if there's mistakes, it's no big deal. There's a whole bunch of fear-mongering garbage online. Oh, if you've got any errors in your tax return, especially foreign accounts, you're going to be going to prison forever and paying a gajillion-dollar fine, but it doesn't really work that way, okay? Everyone makes mistakes. Nowhere on the tax return does it say it has to be perfect. You do your due diligence and do the best that you can, okay? The CPA is going to, or tax preparer, but I meant to say CPA, right? But it's going to sign the return. And so they're acknowledging that they prepared it. But they're not acknowledging that, hey, if there's any issue with it at all, I'm the one that's liable. I'm the one that's going to pay the additional tax or the penalty. It doesn't work that way, okay? It's super important that if you notice anything off on the tax return, especially with the foreign account stuff, if you know about it, that you that you don't submit something that you know is fraudulent, okay? That's how taxpayers can get in some serious trouble, especially in the international tax world, which is what we specialize in here. It's becoming a very common issue where people will come to us where they were goaded into doing something illegal, not necessarily criminal per se, but illegal, violating the tax code because they listened to the ill advice of the tax preparer. There's a long summary that goes along with this presentation with an example. In detail, I'm going to kind of summarize it for you, for those of you that are on the run and don't have the time. Not literally on the run, just don't have the time to sit and read through it. So let's go through the basics of a common example. Peter is new to the United States. He's a lawful permanent resident. He's only been here for a few years. He goes to a CPA. Peter has foreign accounts, never thought about it, had it before he came here. CPA never asked. In fact, CPA sends an organizer, and an organizer is something that the tax client uses to fill out to give the tax preparer information about what needs to be filed. There was nothing in there about foreign accounts, income, assets, or investments, okay? Because at the time, the tax preparer didn't have that many clients. Well, it's a couple years later, tax preparer is at a conference and hears about foreign account reporting. It includes pension and life insurance and all types of investment. He goes, shoot, I have at least 30 or 40 clients that I know have some sort of foreign account. Let me update my organizer. Now, the CPA taxpayer updates the organizer but doesn't really tell the clients too much. And so when Peter's going through the organizer, he's like, well, that's odd. In this particular new organizer I received, there's a whole bunch of questions about my foreign accounts. Do I have more than 10,000 or 50,000 or 100,000? Let me reach out to the CPA and see what's going on. So Peter reaches out to the CPA, and the CPA says, yeah, you know, things have changed a little bit. It's important that you fill it out and send it back to me. Include your foreign account information. Peter goes off on his own, in one rabbit hole out the next, on Google, finding all different information about how he's going to be whisked away forever because he forgot to report some of his accounts. So technically he didn't forget, he didn't know. So Peter's learning about the different amnesty programs, decides he thinks he's going to do streamlined, reasonable cause. Why? Because at this stage of the game, Peter is probably non-willful and will skate by fine doing one of those non-willful programs. He didn't know he had to report anything. He'd only been in the U.S. for a little bit. He hired a preparer, and the preparer sent an organizer. The preparer did explain to Peter that he does do some international. None of this was included. So when Peter talks to the CPA goes, you know what? I got a better idea. I think you should just file forward. Don't worry about it. The IRS has tons of tax returns coming in. You know, we'll get it in there. We'll just start now going forward. The chance of anyone finding you is pretty slim. And Peter goes, well, from what I was reading online, that seems like it could be a quiet disclosure. I could get in trouble. And the preparer says, yeah, but what are the odds? What are the odds you're going to get in trouble, right? Which is legitimate. Not everyone gets caught. I mean, for sure, there are plenty of people, they go their whole life, they will never hear anything from the IRS, no matter how bad their tax returns are. If you're anything like me, unfortunately, in life, things are not going to work out for Peter and his CPA when it comes to doing something like this. So here's what happens. There's two main ways to get in trouble. First way, taxpayer has other clients. The other clients decide to do the streamline program. One client knew about the accounts but didn't take the CPA to task. The CPA never asked. She does voluntary disclosure. She's under audit. She tells the agent examiner that the CPA had told her just to file forward, and then that leads to an investigation of the CPA's accounts, and then finds that there's lots of people, it looks like, who have used this CPA who have been filing forward. Second way is any CPA that's going around telling people to do quiet disclosures might have some other issues in their practice as well. It gets the ear of the OPR, Office of Professional Responsibility, leads to an investigation, leads to an investigation of the CPA's accounts, and it leads to Peter, okay, and other clients. Moral of the story, if you have unreported accounts, assets, investments from overseas, you should consider doing one of the voluntary disclosure programs, or if not, at least know what the risks are. If you're going to do the program, there's the voluntary disclosure program if you're willful or can't certify under penalty of perjury that you're non-willful. There's a streamlined filing compliance procedures, delinquency procedures, and reasonable cause. We have lots of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate for you. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.